Okay, so I think we're about there now. So welcome to our VAT training session for independent schools. My name is Gillian McGill. I head up the VAT team here at Larkin Gowan and specialise in VAT, particularly for not-for-profits and education providers. If you need to get hold of me, my email address is there on the screen, and please do that if you think we can assist you. So this afternoon's agenda, we've got quite a lot to cover in the time allotted to us. We have got opportunities for you to ask questions using the chat box. You're all on mute for now, but if you have got a question to ask, please do. We want this to be as useful for you as possible. Type your question into the question box and we'll get to as many of those as we possibly can throughout the webinar. Any that we can't answer during the time we've got, we will email you directly with a response to the questions that you ask after the webinar. Just so that you're aware, after the webinar is finished, it's going to be uploaded onto the Larkin Gowan YouTube platform. It will be available on our website, and also the slides will be emailed out to everybody who has registered for the event. So without further ado, let's kick off on the scope of VAT. This is the broad definition within the legislation which tells us when VAT is charged. It's charged on any supply of goods or services made in the UK, where it's a taxable supply made by a taxable person in the course or furtherance of any business carried on by him. So there are a few factors we need there in order for VAT to apply. We need supplies to be made by a taxable person, so that's somebody who is VAT registered or should be VAT registered. They need to be supplying goods or services, and you'll hear throughout this webinar and whenever you talk about VAT a distinction between those two things. Broadly, goods are things you can touch and services are things you cannot touch broadly. The supplies need to be within the scope of UK VAT, so that limits the extent of the tax to things taking place within the UK and not overseas. And the activity needs to be a business activity. So if you do something that is non-business, that's broadly something that is free of charge, that is a non-business activity and it will be outside the scope of VAT, which sounds great, but it can then have a knock-on impact on the amount of VAT you can recover on your costs. So, what do we know about registering for VAT at the moment? The registration threshold is currently £90,000 of taxable income, and we'll come on a little bit to talk about what taxable income is. But for now, just think about your fees for education and boarding. Where you've exceeded that £90,000 in the preceding 12 months, so you stand on the last day of the month, look back 12 months and see whether you've got more than £90,000 of taxable income. You then need to notify HMRC within 30 days of that month end, and you're registered from the first day of the following month. Now, more likely, I think, for most schools that we speak to, you'll be registering on the look forward test. So that's when you will exceed in the next 30 days alone. So you notify HMRC within 30 days, and then you're registered from the beginning of the 30 days, i.e. when you had that expectation that you would breach the £90,000. We've said there that there is penalty possibly applied if you fail to register on time. Excuse me. But I do expect HMRC to operate a light touch for schools who are just getting to grips with VAT registering, as long as you registered at or around the correct time. It's worth noting, though, if you should have registered in the past for any reason, that penalty position could be applied by HMRC. So just a little example on the screen to just put that 30 days look forward test into some context for you. If we were standing on the 15th of December 2024 and we anticipated £100,000 of fees that were due to be received for the January term, we would have to notify HMRC about that by the 14th of January, i.e. within 30 days of having that expectation. And then the school would be VAT registered with effect from the 15th of December, i.e. when you had that expectation of needing to register. So I'll just pause at this stage and check whether we've got any questions on registration. And I can see we do have one. How do I register for VAT as my government gateway is for PAYE only? Also, I've asked for access to the corporation tax element. So you will need to add VAT to your government gateway account at some point in order to actually get your VAT return submitted anyway. But if you haven't got a unique taxpayer reference, a UTR, at this point in time, you will need to request that from HMRC in order to progress your VAT registration application online anyway. But we can come back to you and talk to you more about that separately if that's helpful. So no more questions on registration at this point in time. Let me just double check. No. So if we move on then. So what we know is happening from the 1st of January 2025 is that education, which is course, lessons, instruction or study in any subject, are going to be subject to VAT. That includes extracurricular classes and lessons where there are additional supplies of education, but non-educational supplies are unaffected by this change. We have a definition of what a private school is, which I think is fairly wide-ranging and catches most private schools that we would expect to be affected by the changes. And we also have a little bit of anti-avoidance legislation, which prevents you trying to put your education provision through a connected party and say that that connected party is not private school, so therefore this change doesn't apply to them. Importantly, we know that the change to apply VAT to education specifically excludes nursery schools or nursery provision, and those do remain VAT exempt. So we're thinking now about getting your first VAT return ready. Now, the first thing you need to be doing is thinking about what pre-registration costs are now recoverable, because in the past, when you weren't VAT registered, all of the VAT on your costs was an additional cost to you. Now we have this bonus opportunity to recover some of that VAT on costs we have already incurred. So we need to maximise that as much as possible, because that claim needs to be in your first VAT return. So it's coming around pretty quickly now. Where we have got costs incurred prior to your effective date of registration, we can claim those in the first return, as I say, subject to some limiting factors. The first being that services are limited to those that were incurred in the 6 months prior to your effective date of registration. So if we go back to our example, we were registering from the 15th of December, you would go back 6 months from the 15th of December and capture your services that you had purchased. Those services then do also need to relate to the business activity that you're carrying on after registration. Goods, you can go back 4 years from your effective date of registration, provided that they are still held at the time that you register. So if you sold them or you've used them up in any way, you can't claim the VAT on those, but you would be able to on most goods, subject to that 4-year cap, and also some provisions which the HMRC guidance issued in the budget statement set out. Now, what they say is that the incurred VAT, this is for goods, may need to be apportioned over the economic life of the goods, which they say is normally 5 years, and then be based upon a taxable period of use and an exempt period of use. So to put a little bit of context onto that for you, if we have pre-registration costs, so things you've already spent money on before you were VAT registered, on IT software, so that's services, we can't touch it, and that was bought in September 2024 with £100 of VAT incurred. And then we had gym equipment, so goods, because we can touch those, bought in January 2024, on which £500 of VAT was incurred. How much VAT can we recover in the first return? So for the services, software, we can recover £100, all of that VAT that we incurred, because it's within the 6 months. For the gym equipment, the goods, we're going to have to do that time apportioning that HMRC's guidance told us we need to do. So we work out on a monthly basis how much of the economic life is left. In this case, it's 48 months out of the total 60 potential months of economic life, and we claim that fraction of the VAT that was incurred. So that gives us £400 of VAT to recover in the first month. The other thing to think about with respect to getting ready for your first VAT return is the capital goods scheme. Now, this is another bonus opportunity for you to claim VAT on costs that previously you weren't able to recover. So it's important to take the time to identify what those costs might be. The capital goods scheme applies to expenditure of £250,000 net or more plus VAT on land or buildings. So that might be buying land, it might be constructing a building, it might be refurbishing a building, extending a building, any of those things where the project was £250,000 or more. It also applies, although less commonly, to spend of £50,000 net or more plus VAT on computer equipment, aircraft, ships, boats and other vessels. Now, computer equipment here, I should say, doesn't mean 50 laptops at £1,000 each. It means one large piece of computer hardware at £50,000 or more. So that's why I say it's less common that we see this 50,000 test. The 250 for land and property is the one we normally see. So what happens when you've identified those assets? The initial VAT recovery is made on the basis of how you're using them. We'll talk about partial exemption in a minute. But then that initial recovery is subject to review over a period of time. So for land and buildings, we revisit 1/10 of the input VAT that was incurred each year for 10 years. For the other items, we revisit 1/5 of the input VAT incurred each year for 5 years. So you can see that where you might have spent, say 2 years ago on land or buildings of the £250,000 or more, you weren't able to recover that then, but now you might well have 8/10, so 80% of your VAT is now going to be recoverable because you're VAT registered and using that asset in your taxable business activity. So it's a real bonus to you and one worth going back, checking your fixed asset registers to identify those things. Then, because you're reviewing that use of that asset every year, if the level of your taxable use versus your exempt use increases or decreases, an adjustment then needs to be made in your VAT return, and that gets reported in the second return after the end of your VAT year end. Okay. So we know a little bit about VAT now. We know it's got to be a supply by a taxable person, a registered person of goods or services in the UK in the course of their business activity. Fine. Now, the default position then is if you tick all of those boxes, that VAT at the standard rate is due, unless it's been specifically removed from the charge to standard rate VAT. There are numerous exceptions to the standard rate, but we just look at those that we think are more likely to be seen in your schools. What you need to be doing, though, to get ready for your first VAT return is going through all of your income streams, making sure you have identified every single one and allocate a VAT liability to them so that you know whether you need to charge VAT on those items or not. Right, we have got some queries, so I'm just going to check on those. Try to register our school for VAT, but not completed the process because it implies we'll be registered or liable to pay VAT from 2008, because that's when we first exceeded the 90,000 income level. I think you need to be sure that that 90,000 that you're talking about there is taxable income and not exempt income. So the question is probably phrased asking you when you exceeded the threshold for taxable income. So if your 90,000 was for fees back in 2008, it would have been exempt at that point in time. So you probably need to change the date that you think you've breached. Again, we can speak to you directly if that's more helpful. Can we claim laptops, etc., VAT back? So we'll talk a little bit about laptops in particular in a moment, but laptops would be claimed as goods, as you've indicated in your question. Yes, so you can go back your 4 years. You need to do that apportioning thing. So check you still own them at the time you register, and then do your apportioning over your useful economic life for laptops. Yeah. Would we need to charge VAT on pupil premium grant? No. Okay. Right, so we talked a little bit about getting ready for your first VAT return, and we've talked about the need to identify the VAT treatment and liability for all of your income streams and activities. Part of the reason for that is to make sure you're charging VAT when you absolutely have to and not when you shouldn't be. But also it's because how you treat your income drives whether you can recover the VAT on your costs as well. Okay. So keep that in mind. When we're talking about taxable income in VAT parlance, we're talking about income that is subject to VAT at 20%, 5%, or at 0%. Okay, so that would include books, perhaps. School uniform would be at the 0 rate. Exempt is not taxable income. So first of all, let's talk about one of the most common exempt activities that you are likely to be undertaking. So that is supplies of goods and services that are closely related to education. So although the education is now standard rated, things that are closely related to that education remain exempt. It's how the legislation has been drafted. What do we mean by closely related to education? So we need this supply to be for the direct use of the pupil, student or trainee. So it's got to be for that child who's receiving the education and for their use. And it has to be necessary for delivering the education to that person. So examples that HMRC have included in their guidance are catering, transport and school trips. And we've got something to say about all of those things, because the catering at the moment seems to be suggesting that we need to have an optional and separately charged amount in order for lunches to be treated as exempt. Now, that's what the guidance is saying. What we've been told verbally by HMRC is that they don't expect it to have to be optional. Still needs to be separately invoiced or separately shown on your invoice. But whether you want to rely upon that in taking your filing position or not is a decision that every school needs to make for themselves. Bear in mind that if you decide that your lunches are exempt, that's going to be more exempt income, which will affect the amount of VAT you can recover on your costs. We know from HMRC's guidance that catering, so the exempt treatment for catering, will not extend to the provision of evening meals and breakfasts for children who board, because that is seen as part of their standard rated boarding fee. Transportation, that can be 0 rated rather than exempt if it's going to be separately supplied and is in a qualifying transport. So you need to make sure that your minibuses or coaches, for example, if you're charging for home to school transport, are capable of qualifying for the 0 rate rather than exemption, if that's what you want to do. Now, school trips have been included in the HMRC guidance as being closely related supplies to education and therefore on the face of it exempt. But we've also had HMRC guidance telling us that the tour operators margin scheme applies to school trips. Well, that suggests that they're standard rated. So we need to exercise a little bit of caution here. But if your school trips are things which are perhaps field trips, so those sorts of things that are in the part of the course of education, I think you'd be pretty safe to treat those as exempt, as closely related supplies. The next one that is likely to hit most schools, although I appreciate not all, is welfare services. So where you've got welfare services and connected goods, those can remain exempt from VAT. In order to get the exemption, what you need is for that service or the connected goods to be provided by a charity, a state-regulated institution, or a public body. Now, most private schools are charities, not all, but Ofsted, the fact that you're Ofsted registered means that you are state-regulated. And you need to be providing that service and connected goods directly in relation to the care or protection of children and young persons. So this is where we get the exemption for nursery provision. So nurseries are treated as exempt under the welfare provision, so we don't have to worry about the education provision, which now treats education as standard rated. We just need to look at the welfare services for nurseries. You might remember that the draft legislation that was released in the summer indicated that nurseries had to comprise entirely of children who were below the compulsory school age. We have now got a little bit of wriggle room from HMRC in their guidance, and they have said that the nursery class can remain exempt provided that it comprises almost wholly of children who are below compulsory school age, and they give the example of 90%. So I don't know if that's necessarily a litmus test, but you can see that you are able to have some children who are a little bit older, perhaps they've been kept back, they're summer born children, for whatever reason, you can still keep them within the nursery provision and treat that as an exempt supply, which is great news. We can also treat holiday clubs and pre and post school care as a welfare service and exempt that. What we need to be really careful about here is that it is childcare in nature, so it's welfare and is not educational. So we need to make sure that we are not exempting after school revision or sports tuition, because those would be standard rated as being closely related to education. If you have simply got a homework club, a breakfast club, those sorts of things could be exempt because you're meeting the welfare provisions. So I've mentioned sports, so we'll come on to talk a little bit about sports facilities because these can be quite complex. So lots of schools let out their sports facilities. You've got wonderful facilities available. Why wouldn't you maximise the use of those to generate some further income for you? The letting of sports facilities is normally standard rated, so you charge VAT on the hiring out of sports facilities, but there are a number of exceptions to that rule. The ones that we're focused on here are where the let is for over 24 hours, then it can be exempt. That's quite unusual, I think. It's not terribly common that you let somebody have exclusive use of your swimming pool for more than 24 hours. Or more commonly, you are within the series of lets rules. And there's a number of provisions there that need to be met that are quite easy to fall into. But crucially, in order to get the series of lets of sports facilities as VAT exempt, you do need that the hirer themselves, so the user, is a school, club, association, or an organisation representing affiliated clubs or constituent associations, such as a local league. So the rule of thumb here is that if you are hiring out your sports facilities to for less than 24 hours, a continuous 24 hours, to a business, then it's going to be standard rated. So that would catch, say, a local business who hires out your swimming pool in order to use it for them to deliver lessons that generates them income. You would have to charge those users VAT. So you're going to need at some point to go through all of your sports facility users, if you hire out facilities, and check that you know who you're going to charge VAT to and who you can keep as exempt to make sure you're happy with that. The other thing that I should mention, though, is that even if you do have a let that is over 24 hours, so generally exempt, if you have opted to tax your site talk more about this in a minute, then that will be standard rated. Now, you won't have opted to tax your site at the moment because you wouldn't have done that until you were VAT registered. But if in the future you decide to opt to tax your site, that would make those more than 24-hour lets subject to standard rate VAT as well. So we have got many questions as expected. Let me just go through those. If we depreciate IT equipment over 3 years, can we still claim the VAT back if we fully depreciated them? Yes. Yep. What you do for accounts purposes isn't terribly impactful on your VAT treatment. You still need to have the records though to support that. We use a taxi company to transport for local trips. We're charged VAT and we invoice parents for a contribution. Should we be adding VAT? Well, that comes down to a number of different factors. So if you're charged VAT, that doesn't necessarily tell you that you have to charge VAT on. So the first thing to think about is, are those trips educational? Do they fall within your closely related to education, in which case you can treat them as exempt? But then you wouldn't be able to recover the VAT that you've been charged by the taxi company. So that there's a downside to that there. The alternative might be that you get parents to deal directly with the taxi companies, and in which case any charges that come via the school can be ignored by you and treated as an outside of scope disbursement. Again, we'll come on to disbursements a bit more in a little bit. What is the difference between zero or exempt for minibuses? Is it the number of passengers? Yes, you have to have a particular number of seats in the coach. I've forgotten right now what the number is, but yes, we can send the definition of that round to you. But you do still need to have the separate charge to get the zero rating there. Educational overseas trips arranged by the school or tour operators. Can the school claim VAT in both scenarios? So those sorts of things, you might be sending your children to Ireland for an educational trip. Those sorts of things would likely fall outside the scope of UK VAT because most of the VAT that you're incurring will probably be in that country where they're visiting. But the thing we need to think about here is the tour operator's margin scheme. So that's a particularly complex set of calculations to undertake. But what it tries to do is make sure that you're only charging VAT or only accounting for VAT on the margin that you realise on that trip. And as you all know, and I appreciate, the chances of school trips actually generating any kind of profit is quite slim. So once you actually work through the TOMS calculations, there's likely to be a very small amount left to be subject to VAT, if any at all. We've got a question about partial exemption, and yeah, we'll come on to partial exemption in a minute. Do all pre-registration VAT claims need to be made on the first return, or can we stagger? So they should be made on the first return. If you're not including that claim in your first return, then you're effectively making an error correction in the next return where you do claim the VAT and saying, whoops, I should have put that on my first return. I forgot or didn't have the numbers ready, and I'll put it through my next return. And that would be an error. That doesn't necessarily have to be as scary as it perhaps sounds, because some errors, if they're small enough, they can just go through your VAT return and you don't need to make a further disclosure to HMRC. But I really would recommend, if you are at all able, and I do accept that there's a lot of work involved in doing this, get the pre-registration VAT on your first return where possible. So now to talk a little bit about partial exemption, which was one of the questions came on to. So we've talked already about the outputs, that's your income, and making sure you know what's subject to VAT at 20%, 5%, 0% or exempt. Identifying any non-business activities that you undertake, so things that you do for which you receive no income. Then we need to look at your costs. And what we're doing here is looking at your costs, your inputs, and we're saying, are any of these costs wholly and directly linked to just making a taxable, or just making an exempt, or just making a non-business supply? And that's the first step you have to undertake when you're trying to calculate the amount of VAT you can recover. That's called direct attribution. So if we think about an example here, that might be where you have got, let's talk about minibuses then. So you've got VAT that you've incurred on a minibus. You charge out at zero rate the use of that minibus, and it's only used for zero rated home to school transport. So all of the VAT on your costs can be directly related to the zero rated output, and therefore it can be fully recovered. So you need to do that with all of your costs, attribute them all, and then what you're left with at the end will be your lump, your residual pot of VAT on costs that cannot be wholly attributed to either taxable or exempt activities. And those residual VAT sit in your pot and they become subject to partial exemption. So that direct attribution has to happen first. We look at our costs, we look at the VAT on those costs, and we attribute those that we can to our wholly taxable outputs. So that could be costs that you incur exclusively for your sixth formers, perhaps for their education. If they only generate taxable income for you, you can have all of that VAT back. If you've got costs, VAT on costs that relate wholly to your exempt income, so your nursery provision, let's say you're building a new nursery building and it's only going to be used for your nursery children, then you cannot have the VAT back on those costs because it's wholly attributable to your exempt activities. And then you will have your overheads or your residual VAT. So as soon as you've got a cost and even £1 of it is used for mixed use, then it sits in your residual pot. And I would expect the majority of your costs to be sitting in your residual pot where you've got a mixed use site, and particularly where you hire out facilities generating new income. The majority of your costs are likely to sit in your residual pot, and those then become recoverable in accordance with your partial exemption percentage. So we'll just work through a little example about partial exemption here, okay? So some examples of your expenditure which can relate to both exempt and taxable supplies. So your residual pot, your accountancy fees, stationery, phone bills, etc. But I think perhaps more importantly, a mixed use building. So costs relating to a mixed use building will sit in your residual pot. Your partial exemption percentage is calculated using what's called the standard method, which is an income-based method, unless you have agreed in writing an alternative method with HM Revenue and Customs. And it might be beneficial for you to do so, but I think for now, given the timelines that we're all operating within, use standard method income basis, and we'll think about whether a special method is better for you at a future point. That percentage that you calculate is then the recoverable percentage of your residual input VAT, so that pot. And the way we do that is by taking your taxable supplies in your VAT return period, net of VAT, and dividing that by the value of your total supplies in that period. So we then end up with a percentage that is your recoverable percentage of your residual input tax. That percentage under the standard method gets rounded up to the nearest whole number, so that's a little bonus for you. And then it gets applied to your residual VAT and tells you how much VAT you can recover. That sounds quite complicated, I appreciate, but once you're up and running, or you have a spreadsheet template that works this out for you, it will be quite a methodical process to go through every time you're doing your VAT return, and not something to worry about too much. So let's work through a little example. If we had taxable supplies in our period, so that's supplies where we've charged VAT at 20%, 5% or zero rated, of £100,000, and our total supplies in the period are £170,000, so we're assuming £70,000 of exempt income, then our recovery percentage for our residual VAT is 58.82%. That gets rounded up to 59%. So you can recover 59% of your residual VAT. Now, for most of you, I would expect that residual recovery rate to be in the 90-something%, because the overwhelming amount of your income is going to be standard rated, being your fees for education and or boarding. I should mention, though, before we go any further, that once you've done this calculation, this standard method income-based calculation, you may need to consider what's called the standard method override. And what that does is say the income method is a bit of a broad brush approach to calculating VAT recovery. If it isn't fair and reasonable, and a different method of doing it, whatever that might be, gives you a difference in your VAT recovery of 50,000 or more, then you have to use the other method. Now, if there is appetite for it from among you all, we can run a separate webinar specifically on partial exemption and capital goods scheme calculations, and we can cover the standard method override in more detail at that point. But it's just something to keep in mind, that you will need to check once a year whether the standard method override bites. For your first returns, though, just crack on, use your standard method income base. So every quarter, when you do your VAT return, you'll do your partial exemption calculations, and then you need to undertake what's called your annual adjustment. So that comes at the end of your partial exemption year, or your VAT year, which will by default be March, April or May, depending on what return stagger you're on. And you need to rework your partial exemption calculations for the VAT year as a whole, and just check whether you've over or under recovered, because your percentage has fluctuated a bit. That adjustment, if there is one, then gets reported either in that last return of the year or in the next return, so the first return of your next VAT year. It's really important, and it's something to think about doing when you're VAT registering, to request a non-standard VAT year, because I think that will work best for most of you, so that you're able to align your VAT year with your financial year end of July or August. So you can do that. It doesn't form part of your VAT registration application form that you fill in online, but you can do that by emailing the address on the screen and requesting a non-standard VAT year of July or August, whichever suits you for your financial year end best. So then your annual adjustment will run to that date, and then you put your adjustment in the following VAT return period, if there is an adjustment to make. Another factor of partial exemption is the de minimis limits. Now, these bite only when you've got very, very low levels of exempt income. So I think it's unlikely for schools that have got nursery provision in them that there will be an opportunity to claim all of your VAT back under the de minimis limits. But I mention it because it's something worth checking, just in case you think it does give you the opportunity. If you meet the de minimis limits tests set out on the screen for you, so your exempt input tax, so the input tax you've calculated relating to exempt activities, is less than £625 per month on average, and is not more than half of your total VAT that you've incurred in the period, then actually you can recover all of your VAT on costs. So that's really beneficial if you are in that place. But as I say, I think it's unlikely for most schools. So let's check what questions we've got at that point in time. So I shall come back to the partial exemption question that we had. Partial exemption, do we need to first calculate the previous provisional rate and then again calculate R? Okay. So yes, you're right. There is the opportunity to use what's called the provisional in-year recovery rate. So rather than working out every quarter what your partial exemption recovery rate is, what you can do instead is say, in my 2024-25 VAT year, my recovery rate when I did my annual adjustment was 95%. So I'm just going to use 95% for quarters 1, 2, 3 and 4 in 2025-26. And then I'll do a proper calculation for 2025-26 when I do its annual adjustment. And let's say that's come out at 96%, and I'll recover that additional 1% of VAT. So it is possible to do that if you don't want to do your partial exemption calculations every quarter. The problem you'll have with right now with your first returns and your first VAT year is that your previous year will give you, I don't know, 2% recovery. So it's not something that you can do for now. So you're going to have to go through your first year of doing your partial exemption calculations. But after that first year, yes, you'll be able to use the previous year's recovery rate if that works better for you. Just check if we've got any other questions. No, nothing else on partial exemption. So hopefully everybody's still with us. We're going to move on to some of the more tricky or complex areas of VAT. And these are the sorts of things that, to reassure you, we get questions from our colleagues on all the time. So they are the more complex things, raising them more for your awareness rather than expecting everybody to go away fully understanding these areas, but just to keep these points in mind in case they affect you. So first of all, reverse charges. So this applies if you're buying in services from a supplier outside the UK. The place of supply rules that we've got, which operate to make sure that VAT is applied on cross-border transactions, say that where you've got a business-to-business transaction, the place of supply is where the recipient is established. So if you as a school who are established in the UK are buying in services from outside the UK, then the place of supply rules tell you that you have to account for VAT at the local, i.e. UK rate on that service that you've bought. Because the business who is based in the USA perhaps won't have charged VAT to you. Likewise, the Republic of Ireland, where a lot of IT providers and social media providers are established, they won't charge you local VAT because you are going to have to apply the reverse charge here in the UK. So what you have to do on those costs that you've bought in from outside the UK is effectively pretend that you have made that supply to yourself, account for VAT appropriately on that supply. So if it's subject to standard rate VAT, charge yourself output VAT at 20%. And then also go back to thinking, I've bought this in and I've been charged VAT. How much of that VAT can I recover? Might be in accordance with your partial exemption. Say if it's an IT license that's going to supply the whole of the school's activities, it would be recoverable at your residual recovery rate. And then you have to make some entries into your VAT return to make sure that it gets reported correctly. So you would include in your box 1 figure the output VAT that you've charged yourself, pretending that you're the supplier of that service at the appropriate UK rate. Then you're going to include in box 4 how much of that VAT that you've charged yourself you can recover. So you're going to either directly attribute it or you're going to put it through your partial exemption calculation. And then you're going to include a sales value in box 6 and a purchase value in box 7 of your return. So let's put some meat on the bones to see how that works in reality. So we buy an IT license from the US. It's cost £300 to convert things from foreign currency into sterling. The partially exempt school's recovery rate is 98%, let's say. So the entries that go on to the VAT return are in box 1, we treat that £300, we say that would be subject to UK VAT at the standard rate of 20%. So we put £60 into our box 1 figure. Then we think how much of that £60 of VAT can be recovered by the school. We know that the recovery rate is 98%, so 98% of 60 is £58.80. We put that into box 4. Then we report both a sale and a purchase, £300, in boxes 6 and 7. So you can see, I know it's a small number here, but you can see that the UK Exchequer has effectively benefited by £1.20 in this example, because we've paid over VAT at £60, but only recovered £58.80. Okay, so that's how reverse charges work. Only applicable to services bought from outside the UK. So another area that we touched on a little bit earlier, but we'll talk about a bit more now, is options to tax. So when land is opted to tax, and that is a positive decision made by you, the VAT registered person, suppliers of any interests in that land are then taxable at the standard rate of VAT. So land, ordinarily, the supply of land is exempt, but if it's opted to tax, it becomes subject to VAT at the standard rate. You can opt to tax land, which then covers the land and any buildings that are part of that land, or you can opt to tax a particular building if you want to, and that covers that building and the land under it and within its curtilage, but doesn't extend to all of the buildings around it. If you decide to opt to tax something, you need to notify HM Revenue and Customs within 30 days of making that decision. And you do that by completing a VAT 1614A form, and then you can email it to the HMRC Options Tax Unit. If you need to do any of this, get in touch, we can help you with it. You would also, when you're doing that options tax notification, need to check whether any of the automatic permissions apply. So that they can apply if you were previously using that land or property for exempt use, which you will have been before all of these changes. You can have to ask for HMRC's permission to opt to tax unless you come into some of the automatic permissions, and in which case, provided you tick the automatic permissions boxes correctly, you don't need to ask for permission. You can just submit your form into HMRC. So why would you opt to tax? Why would you want to start charging VAT if you don't have to? Well, it will help secure full VAT recovery on costs that relate to that land or property. So if we think back to our VAT recovery position, if we're for some reason going to be building a property on a piece of land, we're incurring VAT on that spend, we want to be able to recover it, and we might have to opt to tax that land and property in order to secure VAT recovery. It's particularly important to be thinking about options to tax ahead of any disposal of land or buildings. So if that's something that you're thinking about, then you will need to take some advice, and I would strongly recommend that you do before you agree to sell any land or property, or indeed enter any long leases of land or property. Important to note that the option to tax, once it's made, you've made that decision and you've told HMRC about it, it sticks with the VAT registration, so it sticks with the school. It doesn't stick with the land. So if you sell it, it doesn't mean that the buyer is opted to tax. That option to tax sticks with you, and it sticks with you for 20 years unless any of the disapplication provisions apply. So it's not something to do without really careful thought, because you are then stuck with it for a very, very long time. So staff houses. So we know that accommodation is often provided to staff because it's necessary for them in the performance of their duties, or perhaps because there's no accommodation available nearby for them to live in. So the VAT on costs for property that's provided will be input tax of the school where that property is provided free of charge. So if you let somebody live in one of your houses free of charge, then the VAT on costs relating to that property becomes a residual cost of your school. So it goes through your partial exemption calculation. So you get some, if not most, of the VAT back. If, however, you charge a rent to the member of staff to live in that house, even if that rent is by way of deduction from salary, then that rent is an exempt income stream. So then you're into the position where any costs that relate to that property won't be recoverable because they would be wholly attributable to an exempt income stream. So think about that carefully. Think about what you do at the moment with your staff houses. Do you charge either directly or by way of deduction from salary? And are you happy that those properties are now exempt properties where you cannot recover VAT on costs that directly relate to that property? I'll touch on cars. I know cars aren't necessarily a big issue for schools, but it's a big issue for VAT. Just to say that VAT on the purchase of cars is blocked from recovery unless you can demonstrate really that the car is a genuine pool car, so it isn't used by any one person for private use. It's wholly just used in the business. It's a very high bar to reach. However, if you lease cars, you can recover 50% of the VAT on your leasing charge and all of the VAT on the maintenance charge, provided that's separately charged for. If you've got VAT being incurred on fuel, you can recover that to some extent, even if it's employees using their own cars for business use, but you're going to need VAT receipts to back that up and to know how much mileage they've incurred and do a calculation to work out the VAT that you can recover. We mentioned disbursements briefly earlier, so just to say that disbursements from a VAT perspective have got a very particular definition. All 8 of those conditions need to be met in order for something to be treated as a disbursement for VAT. Why does it matter? Because if something is a disbursement, it's outside the scope of VAT, so it just bypasses your VAT return altogether. So the kind of thing that you might be able to treat as a disbursement, again, checking that all of those conditions are met, is where you are passing on charges for a peripatetic teacher, where they are actually contracting directly with your families, and all you as a school are doing is administering the movement of monies, acting effectively as a bank account for the teacher and the family. That would be a disbursement and outside the scope of VAT, so it just won't even appear on your VAT return at all. Bad debt relief. Now, hopefully this won't be in a position that you find yourselves in, but bad debt relief can be claimed for invoices that remain unpaid 6 months after the due date. So if you do have families that haven't paid their invoices to you 6 months after the due date, so bear in mind if you offer payment terms, the 6 months starts at the end of those payment terms, then you can effectively adjust the VAT that you've already paid over to HMRC on that invoice. You need to keep in mind as well, though, that it works the other way round too. So if you have got invoices, purchase invoices that you have left unpaid for 6 months, but you've recovered the VAT on those, you'll need to unwind that and adjust the VAT that you've previously recovered, because that would be claimed under bad debt relief by the supplier who has supplied you. As I say, these slides are going to be emailed over to you, so you'll have this for reference, but we have included there just some of the fairly standard checks that we undertake when we're reviewing VAT returns. It might be worth having that somewhere as a little checklist for yourself. Add to it by any means, just to make sure that when you hit submit on your VAT return, you're confident that what you're filing is as correct as it can be. What happens if it's not correct though? So we mentioned before, if you have got pre-registration input tax that you haven't had a chance to calculate to include in your first return, perhaps you're going to recover it in your second or third return, it's strictly that is an error, and it could be something that you need to tell HMRC about. However, if your error, the VAT on the error, is less than £10,000 in that period, that VAT return period, then you can just put that adjustment through your VAT return and you don't need to tell HMRC about it. If your error is more than £10,000, the VAT is more than £10,000, but is less than 1% of your box 6 figure for that VAT return, so that's your sales figure, then it can still go through your VAT return and you still don't need to tell HMRC about it. It's only if you breach either of or both of those tests that then you've got to disclose your error to HMRC. And the way you do that is using a VAT 652 form. And again, we can help you with that if you find yourself in that position. Help you either calculate whether the error is within the disclosable limits or help you submit a VAT 652 if you need to. So we've got all of our VAT return workings ready. We've worked out the liability of our income. We've worked out how much the VAT on our costs we can recover. We've done our partial exemption calculations. We need to submit our VAT return and make any payment of VAT due 1 month and 7 days after the VAT period end. So if you had a March quarter end, your return and your payment need to be with HMRC by the 7th of May. So you've got a fair amount of time there to gather your data, get your calculations done, do your checks, send it for review by your advisors if you wish to before you hit submit to HMRC. Submissions are going to have to be made online and they're going to have to be Making Tax Digital compliant. So what that means is either your system is going to have to be able to submit your returns digitally, or you're going to need to use, probably more likely, an API enabled spreadsheet to upload your values to HMRC. Lark & Gowan have an offering that we can provide of an API enabled spreadsheet on an annual basis. So let us know if you need that from us. And we would strongly recommend setting up a direct debit arrangement to ensure that your VAT payments aren't late, because interest would be applied if they were. I would also suggest that you consider obtaining tax inquiry protection cover in case of an HMRC compliance check. What that does is enable any professional fees that you incur in relation to that compliance check to be covered by the policy rather than you having to worry about paying for them. I think it highly likely, in fairness, that HMRC will be checking schools' returns in the first year or so. Obviously, it's all new to you, so it would be worth considering getting that protection if you can. School does renovation to its building. Is the options tax required to recover VAT? Not if you're using it yourself. So if you have to think about how that building is going to be used. If you're using it yourself in your school business, you need to then establish whether you're going to use it only for standard rated activities, only for exempt nursery activities, or it's a mixed use building, and then you can recover it at your residual recovery rate. You would need to opt to tax it if you're going to make external use of it. That's when you need to think about opting to tax, really, not when you're using it in your own business. Do you get tax inquiry protection cover from an insurance company? I think you probably can. The way that the Lark & Gowan offering works is that we enter an insurance contract with an insurance company that covers our fees, and then we charge you a fee just for the premium for that cover on an annual basis. Another question about unique taxpayer references required for registration. We don't think we have one. How do we request one from HMRC? So I think all of the Lark & Gowan clients that we have checked have got unique taxpayer references, but if you don't have one, then you can email HMRC and request one, and I can send you the email address over after we finish today. Any more questions in the 1 minute that we have remaining to us? As I say, the slides will be coming out to you. If there is appetite from you, and please do let us know, for us to run a separate partial exemption capital goods scheme session, including the standard method override, let us know, because we can do that, and we can do that perhaps in December for you so that you've got a bit more clarity on how that works. Okay, so please do get in touch with any of us. My contact details were at the start. If you want to speak to anybody at Lark & Gowan, our general inquiries email address is there for you. This presentation will be uploaded online, and of course the slides will be coming out to you. Thank you all very much for your time, and thank you for all of your questions and engagement. It's been great to speak to you, and hopefully we'll hear from you all soon. Thank you.